Good evening, everyone. Is my audio and video clear? Please let me know in the comment section and then we'll begin. Good evening, Bhakti. How are you? What about others? I see many students attending the class. Is my audio and video clear or not? Okay, so let's begin with the session here. A very good evening to everyone watching this video. I am Manat Sharma from Oliveboard. And like every month, we cover the RBI Bulletin, which is important from your exam point of view. It gives you, good amount of insights related to the Indian economy, and you will get a lot of information through these bulletins. That is why it is important. Because stuff from here and data from here you can utilize in your answers also, and direct MCQs can also be formed, right? Apart from that, 2-3 days back only I had taken up RBI Bulletin of May 2025, and I have also taken for all the months till now, Jan, Feb, March, April, May. So you can watch that out as well. Okay, fine. So this is for June. We are going to discuss about this in detail. All right. And before I begin, if you want to download this YouTube class PDF, you can do it from the Oliveboard app. Just go to the courses section. There's going to be a separate YouTube class PDFs folder, and from there you can download the PDF. All right. Very good evening, Aditi. I hope you're doing well. All right. So, in this bulletin, it started off with RBI reducing the policy repo rate by 50 basis points to 5.50, and I'm sure this everybody knows. There was a major shift in the monetary policy aimed at reviving growth and easing inflation pressures and a resilient domestic economy. So this everybody knows. Excuse me, sorry. Okay, so this was the major. This bulletin started off with this policy repo rate reduction. This was the third rate cut in 2025. Central bank first cut repo rate by 25 basis points in February, then by 25 basis points in April, and by 50 basis points in June. So a total of 100 basis points. We've seen a reduction in the repo rate. Plus, the stance also shifted from accommodative to neutral, and now here what is important is that you need to know the types of stances, the types of monetary policy stance: neutral monetary policy stance, accommodative stance, hawkish stance, dovish stance. Right, you need to know about these types of stances, and many times I have discussed them in detail as well in the live mint sessions, also in many YouTube class sessions also. So this you have to know the difference between the stances: neutral, accommodative, hawkish, and dovish. And I also explained very beautifully the difference between hawkish and dovish. If you know it, well and good. If you don't know, just let me know in the comment section. I will explain them right now. I'll just give you a gist again. But you should be doing this. This is your homework. I'm sure you know about all these stances, and for those of you who are attending my classes regularly, you would definitely know the difference between all these. Okay. So RBI is focusing on supporting private consumption and investment, given that inflation has softened below the target. Growth outlook is also modest, and this is the first time since the pandemic that RBI has focused on this neutral. It has front loaded such a large cut with a neutral stance. Okay. Inflation in April 25 hit a 6-year low of 3.2%. India's economy is projected to grow at 6.5% in 25-26. But obviously, there are geopolitical tensions, there are, slow trade, there are such kind of issues which still remain. Okay, RBI has been pushing and focusing towards financial inclusion, digital payments, responsible credit access, aligning it with a broader growth strategy. Fine. So initially we're going to talk about the key highlights from the report, the basic highlights from the report, and then we are going to move on to the chapter-wise details. Okay, we're going to move to the chapter-wise details. So Bhakti is saying hawkish to control inflation, dovish promote economic growth. Very good. So for those of you who are new here, let me just give you a very, a gist about all this, about the stances. Okay, See, when we talk about accommodative stance, it is nothing but it is called easy monetary policy. Easy monetary policy, which means we are trying to increase money supply in the economy. Okay? If we are trying to increase money supply in the economy because inflation in this case is controlled already, right? Then we have neutral stance, wherein we are not doing anything. We are staying at where we are. We are neither following easy monetary policy nor we are following expand or contractionary monetary policy. Then there is called hawkish stance, and then there is this dovish stance. Hawkish is opposite of accommodative, which means you're going to focus on tight monetary policy. You're trying to control inflation. Okay, this is our major goal. Dovish is similar to your, similar to your accommodative stance. Dovish is similar to accommodative. The only difference is that dovish is a more broader stance. It is a broader outlook for an entire year or the overall position of what RBI is trying to promote, which is stimulating economic growth. And how is it going to stimulate economic growth? By following an accommodative stance, by following an easy monetary policy or a expansionary monetary policy. So accommodative is that what we're actually doing at the grassroots level to focus on this broader goal of a dovish stance. Take it. So dovish is a broader word which is encompassing what the stance of the entire RBI is. What is the stance of the entire monetary authority? Right now, what is my stance? It is accommodative, which means I am focusing on easing out the monetary policy or focusing on expansionary monetary policy. So I hope you've understood this, the types of stances and the difference between all these. Fine. Acha, then we have, let's talk about the key highlights from the bulletin. We have the monetary policy decisions which were taken between 4th June to 6th June 25. Repo rate we've seen reduced by 50 basis points and it is 5.50% as of now. Apart from repo rate, you need to know the other rates as well. You need to know the CRR, which is at how much percentage. Who's going to tell me? We are going to reduce CRR by 100 basis points in 4 tranches. So what CRR are we aiming at according to this RBI's Monetary Policy Committee? I want you to write it in the comment section and tell me. Who's going to tell me? Currently, it is 4%, yes, Atithi. And what is our aim? That we want to reduce it by 100 basis points. So basically, this will be reduced to 3% in 4 tranches. Exactly, by 29th November. Okay? Absolutely correct. Very good, Atithi. SDF, which is your standing deposit facility rate, is adjusted to 5.25%. So this is usually 25 or you can say 0.25% less than your repo rate, always SDF facility. And your marginal standing facility rate and your bank rate are usually 0.25 percentage higher than the repo rate, okay, which is at 5.75%. So this is how you can remember. So you don't need to remember what is the current rate of MSF, bank rate, SDF rate. What you have to remember is that SDF is always 0.25% less than the repo rate, and marginal standing facility and bank rate are always 0.25% above the repo rate. Stance shifted from accommodative to neutral, and the objective is to control inflation while also focusing on stimulating growth. Right? So these were the monetary policy decisions that were taken up. You need to know about these. And especially when you go for the exam, before the exam, please, you have to check out what is the current rate. It's very important for any exam that you prepare. Okay? Then about the growth and inflation outlook. For 24-25, real GDP growth 6.5%. Projected for 25-26 is 6.5%. CPI inflation is expected to average 3.7% in financial year 26. This data is also very important. This data is also important. Then there's a governor's statement that inflation is down from October 2024. A policy room has been created for supporting the growth. India's growth trajectory remains resilient, and India is supported by this 5 by 3 by 3 matrix, which is that there is there are these 5 sectoral balance sheets. We are going to discuss this in detail in the next few slides. We have 3 pillars of stability and the 3 Ds, which is your demography, digitalization, and domestic demand. Because of this India's growth remains resilient. ठीक है, अभी let's see in the next few slides. We're going to discuss about this matrix also in detail. What are the financial inclusion initiatives taken up by the government? We have this JAM, UPI, ULI, Trinity, which has revolutionized the credit delivery system in our country. We've used, there's use of alternative data like milk pouring, land records, satellite imagery in lending. Acha, can you tell me what is the meaning of milk pouring? Milk pouring. What is the meaning of milk pouring over here? Anyone? Anyone? It is a kind of, basically milk pouring is a kind of alternative data only, wherein you're not using the traditional methods, you're not using the traditional methods for obtaining data, but you are focusing on use of say artificial intelligence, or using alternative methods like satellites, and also different methods you are using which is not traditional. That is what is called milk pouring over here. Fine. So custom financial products based on local patterns. We are following customized financial products based on the local areas. We're focusing on low bandwidth. We are pushing for low bandwidth mobile interfaces in the rural areas. So these are certain financial inclusion initiatives which have been taken up by the government, or by RBI over here. Okay. For digital payments and infrastructure, digital payments have seen a 35% year-on-year increase. UPI payments accounts for 83.73%. 514 districts in 15 states and 6 UTs are 100% digitally enabled. So these kind of statements can be utilized in your answers. You should write them in a separate notebook. That 514 districts in 15 states and 6 UTs are 100% digitally enabled. And other, in your when you get MCQs, उसमें statements ऐसे अलग से you can get statements, and one of the statement can be that 514 districts in 15 states and 6 UTs are 100% digitally enabled. तो अगर इससे कुछ question आए तो ऐसा statement can be formed. UPI Lite limit has been raised from 500 to 1000, and UPI 123 pay limit has been increased from 5000 to 10,000. ये तो I'm sure you all know only. This data we have, I think, done it in the live mint analysis also, that UPI Lite limit has been raised from 500 to 1000. UPI 123 pay from 5000 to 10,000. Again, when MCQs are formed, this statement can be written over there. उल्टा भी कर सकते हैं, that UPI Lite limit increased from 5000 to 10,000, UPI 123 pay limit increased from 500 to 1000. है ना, तो ऐसे डायरेक्टली MCQ भी आ सकते हैं. So you need to be careful of these things. Such minute details are asked in the examination in the form of MCQs. UPI Circle has been introduced for unbanked users. So you should know these terms: UPI Lite, UPI 123 Pay, then UPI Circle. You should know about these. Okay? What is the difference between these? A separate session has been taken up on Oliveboard. I think Payal ma'am has taken up a session wherein she's discussed about the differences between these. तो ये आपको पता होना चाहिए. Do these things as a homework. है ना? Whatever I'm saying, write it on the side of the paper and you have to look for it later on. RBI's Financial Inclusion Index improved from 60.1 in March 2023 to 64.2 in March 2024. So यहाँ पे भी they can ask what is the current according to RBI's Financial Inclusion Index. It has been improved from 60.1 to 64.2. ऐसे MCQ can be directly there. So ये भी आपको याद होना चाहिए 60.1 to 64.2. Focus is still needed on credit gaps and awareness about the government schemes, right? Then what are the challenges in financial inclusion that has been identified in the bulletin? There has been a 33% rise in the grievances to RBI Ombudsman and CRPC. Concerns on mis-selling of financial products we have seen. We've discussed about this problem also before. Need for digital literacy and cyber safety. Issues in microfinance segment persist. So there's a need for ethical recovery practices. And if we talk about the other insights, then there are strong macroeconomic fundamentals. CRAR at 16.43% and gross NPA is at 2.42%. NBFC sector shows high capital adequacy with 26.22% CRAR. Okay, fine. Now let's move on to the detailed analysis. I hope there's no doubt till here. I hope it is clear. Anything that you want to ask, you can write it down in the comment section and keep asking. Okay. So we've seen these changes: repo rates, SDF, marginal standing facility, and policy stance. We've already seen this. Now, why has the RBI taken up this stance? Why has it reduced CRR? Why has it reduced the repo rate so much? Why has it shifted from accommodative to neutral stance? You need to know about the rationale behind it, and that is what is mentioned in this bulletin. So rationale is basically inflation was controlled. It fell significantly from above the upper tolerance level in October 24 to 3.2% in April, which is at a 6-year low. So inflation fell significantly. Inflation is expected to undershoot the 4% target, right? This revised financial year 26 CPI projection is 3.7%, right? And if we talk about the growth forecast, then real GDP growth 6.5%, CPI inflation 3.7%. Goal is to ease, front load easing to support investment and consumption, right? Then there's this governor's statement of Shri Sanjay Malhotra ji. He gave a statement on June 6. He said that OECD and IMF have revised down global growth to 2.8 to 2.9% in 2025. WTO projects global trade volume to contract by 0.2%. Inflation is following, but final phases of disinflation are proving sticky. So, firstly, the global scenario has been given, and then the Indian position has also been given, that the Indian economy remains strong. Why does it remain strong? Because of this 5 by 3 by 3 matrix. Such kind of a statement can be utilized in your answer, that India remains strong, Indian economy is resilient because of 5 by 3 by 3 matrix. In fact, Viksit Bharat से related कुछ question आता है, or you can talk if they ask you about India's position in any sense, or even in the interview, if someone asks you about, if in the interview you reach till the interview and they ask you that what do you have to comment on India's position as of now, India's Indian economy's position. So, such kind of statements you can use while answering your question, in the interview as well, and even in your long answer questions. This is going to really add value to your, and you can even quote that according to one of the RBI bulletins, this is Indian economy is resilient because of this. So essay you can use 5 by 3 by 3 matrix, which is we have 5 strong balance sheets. Balance sheets of corporates, banks, households, government, and external balance sheets all are quite strong. We have 3 pillars of stability, which is we have price stability, we have financial stability, we have political stability. We are our 3 Ds are very strong. We have a good demographic dividend. We are focusing on digitalization, and we are boosting domestic demand. Very good statement. Please note it down. Write it down in your notes. You can actually use it. That what is India's position as of now. Fine. So inflation, RBI has revised down the inflation forecast from 4% to 3.7%. Private investment and consumption need a push via the policy levers. We need to bring policy changes. Repo rate reduced. This policy now becomes data dependent going forward. Okay. Real GDP, we've seen these are the changes that we've seen. Real GDP 6.5%, inflation 3.2%, driven by food inflation drop. So you've seen a drop in the food inflation also. Growth projection 6.5%. We've seen that. Risk balance, even there can be risk upside downside. We can see certain risks. Monsoon forecast is above normal, and there's an FTA with UK that we are signing amid these geopolitical tensions. So that is a positive thing. Okay, these are the projections. You can see the CPI inflation projections. We've already seen the data over here. Okay. This is quarterly projection of GDP growth, and this is also year on year GDP growth. This is for inflation. This is for GDP growth. Okay. Then there are certain speeches which have been mentioned in the RBI bulletin. We have to know what are these different members saying. So Sri Sanjay Malhotra ji, at the 58th convocation in IIT Kanpur, what speech did he give? He emphasized the importance of continuous learning in the world of rapid change. So he said that we need to continuously learn, even if you reach some kind of position, even if you become an officer. So this is for everybody. Even if you at any stage of life, somebody who's learning continuously will always be able to thrive in a changing world. People who do not continue learning, who stop at some point of time, they are stuck in this in a particular time. They are never evolving, they are never changing, they are never adapting to different changes. So, what has Sanjay Malhotra ji emphasized, that we need to focus on continuous learning throughout our life, and that is what is going to keep us very relevant, in our field. It is going to keep us very relevant in these changing circumstances and this changing world. He recalled his time at IIT Kanpur and how the training prepared him for various sectors: power, finance, taxation, banking. He urged the students not to feel that they've arrived. So you've never arrived at the final position. So you don't have to have that kind of ego. You need to stay humble, stay curious. And he gave certain life lessons. That there's the first life lesson was that we need to learn for life. Learning should never stop, and this is for everybody. Why I've added this is because this is going to add value to your personality as well. ठीक है, change is constant, so you have to adapt to changes. So you can't say कि अच्छा, like we've seen that because of more and more use of AI, the people, many jobs are going, right? But that is what is the beauty of change. Change happens, and you need to adapt to those changes. ठीक है, change is the new constant. Change is what is constant, and you have to adapt to those changes. Ethics are more than intelligence, and that is what is going to keep you unique in today's era, because ethics, we know, are declining, values are declining, value systems are declining. Okay, somebody who has a good value system, who has good ethics, is going to let this world be a positive place to live in, basically. Self learning, the most valuable skill is in this fast changing world, is that you have to keep learning. Not everybody is going to give you or spoon feed you. You have to keep learning on your own, right? Then second speech was given by Shri M Rajeshwar Rao ji, moving the boundaries of financial inclusion. What were the key messages that he gave? That financial inclusion is not a charity, but it is a right and obligation of the government, of regulatory bodies, of it is mandatory. It is not charity, but it is the right of these people to be included. Linked to 7 out of 17 SDGs of the UN. So this financial inclusion is included in 7 out of the 17 SDGs. JAM UPI ULI framework will revolutionize rural credit delivery. India's access to bank accounts is more than 95%, though usage and quality of access needs improvement. Okay, so this statement can also be used that India's access to bank accounts is more than 95%, but the quality and usage is still lacking. Fine. Then another okay, yes. So in his statement only, Rajeshwar Raoji's statement only, he talked about the journey of financial inclusion, how it started. So we started off with priority sector lending in the 1968. Then we focused on banks nationalization in 1969. We had this lead bank scheme that we focused on in the rural areas for promoting financial inclusion. There are no frills accounts as well. First formal use of the term financial inclusion was in RBI's 2005-6 policy by Dr. YB Reddy. Now, if you get a question, let's say long answer question related to financial inclusion, you can start your answer. You can start your answer with such kind of a statement. And that the first time the formal use of financial inclusion was in RBI's 2005-6 policy by Dr. YB Reddy. ऐसे करके you can start your answer with, है ना? ठीक है, then push for micro credit design. Emphasis on ethical practices in microfinance was another thing that helped us in financial inclusion. All these were the highlights. There were speeches which have been mentioned in the RBI bulletin. Now comes the detailed analysis of the 5 chapters from the bulletin. So there are 5 chapters of the bulletin, and each chapter we are going to discuss in detail the important points. and you have to extract. See, these reports are only going to be useful for you if you remember the data mentioned here, and more than that, if you are able to collect information to be written in the answers. Like I told you that you can use such kind of statement in starting up your answer. That is going to add value to your paper, and that is going to make your answers unique as compared to the others. Okay, I hope this is clear. So let's move on to the detailed analysis of the uh, bulletin. So, firstly, first chapter talks about state of the economy. The global economy, if we talk about the global economy, it is in a state of flux, reeling from twin shocks. So, there are twin shocks of trade policy uncertainties and a spike in geopolitical tensions. These are the twin problems that the global economy is facing. But if we talk about India, then we have a resilient economic activity across the industrial and services sector. Agriculture showed a broad-based increase in production, in the major crops. Headline inflation is staying below the target. So our conditions, Indian economy is resilient. If we talk about the employment signals, they are mixed. Unemployment rose to 5.6% in May, from 5.1%, which is largely rural. Rural unemployment has increased. Heat waves have increased. Job creation is strong in organized manufacturing and services sector. So there are mixed signals from the employment area. Good evening, Sarthak. Very good evening. What are the high frequency indicators? GST collections have improved more than 2 lakh crore for the second month, which is a positive thing. E-way bills, tolls, digital payments have surged. Petroleum demand has revived. Electricity demand has fallen, maybe because of unseasonal rains, early monsoon. Okay? If we talk about fiscal trends, then fiscal deficit is lower than expected. Your capital expenditure outlay rose 28.6%. Revenue receipts were up 16.7%. Merchandise exports, if we talk about the export sector, then merchandise exports shrank. Services exports remained steady. So merchandise exports are goods exports. Services export remain steady, remain good. Goods exports reduced. Current account deficit expected to be less than 1% of the GDP. Inflation declined to 3.2% in April. If we talk about monetary conditions, then liquidity is in surplus. Deposit growth outpaced credit in April to May. Fine. Then financial conditions index for India. Then it is this article, this second article was related to uh, this financial conditions index for India. Okay, so indicators have been used like money, government securities, corporate bond, equity, foreign market. These indicators have been used to find the financial conditions index of India. Uh, and the objective is basically to construct a composite indicator that tracks the conditions of the financial markets. And what are the highlights of this index? It assesses the degree of relatively tight or easy financial market conditions, whether financial conditions are good or not. Okay, the estimated FCI traces movements in financial conditions across both periods of relative calm as well as crisis. So this FCI, which is your index, financial conditions index, which is calculated even in times of crisis and even when things are fine. And this index suggests that in the aftermath of the pandemic, exceptionally easy financial conditions was driven by combined impacts of amiable conditions across all market segments. That means we've seen a positive outlook in the financial conditions index. Okay? Then, in the current financial year, it remained a congenial, riding on a buoyant equity market and a money market suffused with liquidity. So, basically, our liquidity conditions are in surplus right now. Okay, so constructed a daily FCI using 20 indicators. So, this FCI Financial Conditions Index, it is done on a daily basis, and 20 indicators have been used across 5 markets like these: the money market, government security market, corporate bond market, equity, and forex market. Fine, and financial conditions were exceptionally easy post-COVID. Since November 2024, conditions started tightening, though remained generally accommodative, and FCI is a leading indicator for economic activity and policy stance. Okay? Chalo. Next chapter is related to your balance sheet channel and balance sheet channel of monetary policy transmission insights from Indian manufacturing firms. So monetary policy, which plays a key role in influencing investment in fixed assets of manufacturing firms through the balance sheet channel, a mechanism where interest rate changes affect a firm's financial health. So we are talking about this monetary policy transmission. What does this mean? When repo rate is reduced, how is it transmitting? How fast is it transmitting to the consumer level? Is what is called the monetary policy transmission mechanism. So when repo rate is reduced, that means the commercial banks, they can take more loans from RBI. When commercial banks can take more loans from RBI, that means they will also have more money to lend. When they have more money to lend, they will also reduce the rate of interest. When they reduce the repo rate, when they reduce the rate of interest, then the consumers are able to take more loans, which will infuse liquidity in the economy. So this entire process is called monetary policy transmission. So how these interest rate changes affect a firm's financial health is what is this monetary policy transmission, and that is also tracked. Okay, and this article here determines the existence of the balance sheet channel of monetary policy transmission in India. And this is active among Indian manufacturing firms that we are seeing. Small firms, which in general face relatively greater financial constraints, rely more on internal funds for investment in fixed assets. So what they are saying is that जब monetary policy tightening हो रही है, that means when we are trying to control inflation and money supply is trying to be reduced, then small firms क्या करते हैं? They focus on their own internal money, what they can generate. ठीक है, because they have more financial constraints. ठीक है, while both these high leverage and less leveraged firms are affected by monetary policy through this channel, difference in their sensitivity of investment to cash flow is inconclusive. So we're talking about highly leveraged firms and less leveraged firms basically. The difference between them, how they're utilizing their money, the difference in their investment, that is difficult to track. Okay, and for this we have studied 584 Indian manufacturing firms and used panel regression. Okay, you don't need to know what is panel regression. It is a type regression wherein we try and see the correlation between, like over here we are trying to see the relation between monetary policy transmission and the investment mechanisms. So what is the relation between the two? ठीक है, so यहाँ पे what did we find? That a 1% reduction in real interest rate leads to investment rise by 9 basis points in the short run and 109 basis points in the long run. So if you are reducing the real interest rate by 1%, it is leading to an increase in investment by 9 basis points in the short run and 109 basis points in the long run. ठीक है, it is strongest for small and highly leveraged firms, and crises like COVID, NPAs and all, they have weakened the investment responses, but otherwise overall scenario is good. ठीक है. Now again we have this next article which is related to certificate of deposit. Certificate of deposit. Can anyone tell me what is the meaning of certificate of deposits? What are certificate of deposits? Anyone can tell me what is the meaning of certificate of deposit? We've also done this in one of the classes before. We studied it that this is a money market instrument. Money market instrument. Who is going to tell me what is this? What is the meaning of a certificate of deposit? Investment tool offered by financial institutions, short term borrowing के लिए money market instrument है. Exactly. So this is a money market instrument for short term short term raising of money. ठीक है. And we have discussed about the money market instruments in detail in on the YouTube channel, wherein there was this news that there have been changes in the timings of the call money market. So वहाँ पे I have discussed this in detail. Please go and take a look at that video. ठीक है, take a look at that video. Issuer banks या financial institutions होते हैं. Yes, Tithi, absolutely correct. So this article related to certificate of deposit, it examines the market microstructure of CDs in India, certificate of deposit, including issuers and investors' profile, and assesses the potential drivers of certificate of deposit issuances, that what is driving the use of these CDs. Okay. So here we are saying that credit growth and tight liquidity conditions are found to enhance CD issuances. So credit growth and liquidity conditions are the drivers of CD issuances. Market volatility and current and expected increase in interest rate dampen CD issues. ठीक है, so CD issuances को dampen करता है ये, which all problems, market volatility and expected increase in interest rate. अगर expected increase in interest rate से, so people they issue less of certificate of deposit. ठीक है, जो पब्लिक सेक्टर बैंक्स है, द पब्लिक सेक्टर बैंक्स, दे रिलाई ऑन सर्टिफिकेट ऑफ डिपॉजिट issuances more than private sector banks, which you have to remember. So who issues the certificate of deposits more? The public sector banks more than the private sector banks. ठीक है, then PSBs enjoy lower cost of CD issuance on an average than others. So cost of certificate of deposit is less for the public sector banks. Okay, and for small finance banks, the rate is usually higher than the others. Okay, because of this risk premium. Liquidity condition, interest rate expectation, volatility, these determine the CD issuances in the long run. So long run में what determines the issuance of certificate of deposits? The liquidity conditions, the interest rate expectation, and the volatility. ठीक है? And in the short run, liquidity is found to be the major driver of CD issuances. So in the short run, it is liquidity majorly, and in the long run, it is liquidity condition, interest rate expectation, and volatility. Right? Post-COVID mutual funds dominate the CD investments. Corporates, banks, reduced exposure. 91-day CDs dominate post-April 2023. So mostly we're using the 91 days certificate of deposit. Private banks issue longer tenure CDs, which is average of 222 days. So private banks, they usually offer, they usually issue long-term CDs. And there's an empirical finding based on auto-regressive distributed lag model. You don't need to go in details at what model has been used. This is core econometrics, which you do not need to get into. Okay? ARDL model has been used here, which is used to find the relation between two things, basically. It is one of a model which is used to find relationship between two different things. So what we've seen is that when the certificate of deposits issuances are increased, they are increased with credit growth and liquidity tightness. So जैसे जैसे your liquidity is reducing, credit growth and liquidity tightening हो रही है, so certificate deposit issuances are increasing and they decrease with market volatility. अगर market volatility बढ़ रही है तो CD issuances कम हो रहा है. Fine. And banks have been increasingly using certificate of deposit to meet short-term funding needs. Why? Due to credit growth outpacing the deposit growth. So credit growth is increasing and deposit growth is less. ठीक है? Tight liquidity conditions in the banking system. There are tight liquidity conditions in the banking system. तो वहाँ पे ये भी है. The article uses a auto-regressive distributed lag model. You don't need to know about the details about this. ठीक है? Yes, you can. So there's some bacteria who's asking. I'm from biology background. Can I apply for RBI Grade B post in future? Yes, you can. Okay, so there's this basic minimum qualifications. Just read out the details of the qualifications that you need and you can apply. There are many people from different backgrounds who are preparing for this. Right, somebody is doing MBA, somebody is doing engineering and all, है ना? So they are also applying for this. चलो. So I've written the details of certificate of deposit over here. It is a negotiable unsecured money market instrument which is issued by banks. So the maturity is 7 days to 1 year. It is issued at discount and redeemed at par. That means, for example, 1 lakh का CD है. So it is issued at discount. That means say 95,000 पे issue है. ठीक है. So if you're taking that certificate of deposit So, then you'll get 95,000, but you have to pay back 1 lakh. That is what this means. So it's like a T bill only, है ना, जैसे treasury bill में होता है, ठीक है. And the trading time is T+0 or T+1 settlement. And schedule issuers are scheduled commercial banks, RRBs, small finance banks, AIFIs. And who are the investors? The ones who are residents in India. Zero coupon, exactly, Aditi. And they are not eligible for loans but can be bought back after 7 days. ठीक है. So its maturity period is from 7 days to 1 year. And what are the major trends in this? We have seen that there is a mismatch between the credit growth and the deposit growth. ठीक है. तो credit मतलब loans देना and deposit मतलब कितना बैंक में deposit हो रहा है. ठीक है. So this growth in credit has been faster than the deposits. ठीक है. And that is why banks are relying more on certificate of deposit issuances because of this. ठीक है. Public sector banks have increased their share from 6% to 69% from 22 to 24. Private sector banks declined from 85 to 30%. And mutual funds are dominant investors, while banks, financial institutions, and corporates, they have declined post COVID. ठीक है. And when we see these the tenor trends, then average tenor rose from 95 days to 296 days during the rate cuts. So for as long as 296 days, these certificate of deposits are being issued. ठीक है. And as interest rate hikes resume, so reduce भी हुआ है 128 days in 2022 and increase to 146 days in September 2024. ठीक है. So we've seen basically an increase in the time frame as to how many for how many days you are issuing the certificate of deposit. And most certificate of deposits are issued for less than or equal to 91 days or 180 to 365 days based on the liquidity conditions that are there and based on the liquidity strategy that is there at that point of time. Fine. And the positive drivers for CD issuances are basically higher credit growth, tight liquidity conditions, beginning of interest rate up cycles. ठीक है. तो credit growth is increasing, liquidity conditions tightening, beginning of interest rate up cycles. Negative drivers are high market volatility and uncertain interest rate outlook. Fine. Good evening, Manu Gupta. You want to purchase a batch for RBI Grade B, but the site is unable to reach and the app is not available in the App Store. The app is not available in the App Store. There is only Android app of Oliveboard. Manu, you can connect with me on Telegram. ठीक है? Mannat Educator is my Telegram handle. Okay, I will give you a number to connect with the head or the manager over there, and you can connect. Aditi, he meant batch. And so this is my Telegram handle. Okay, Manu, just text me over here on this Telegram group. Just text me here, and I will share the contact with you. You can directly talk to them about the batch or whatever you want to purchase. Will that be fine? Will that be fine, Manu? Let me know. And Anushka, मेरा viewpoint session is every Sunday at 9 p.m. Sunday को at 9 p.m. every Sunday. ठीक है Anushka? This is the timing of my viewpoint session. Live mint analysis that I take up, uska session is every day at every Monday, Wednesday and Friday at 8 a.m. जो मेरा viewpoint session है, that is every Sunday at 9 p.m. These are the fixed timings. Apart from that, other timings wherein I take up classes is 4 p.m., 7 p.m. or 9 p.m. So these are the other timings wherein I take up a class. ठीक है? Manu, I hope this is clear. Just connect with me on Telegram. Mannat Educator is my Telegram handle, and others also, if you're not part of the group, if someone new is here, so you can connect with me here. ठीक है? Acha. Next chapter is related to CPI inflation in India. So combining the forecast from a suite of statistical and machine learning models. Basically a combination. A suite of statistical and machine learning models is a combination of statistical and machine learning models. So here the study develops a methodology to forecast headline and core CPI. So a methodology they are suggesting to forecast headline and core CPI. Core CPI is basically excluding food and fuel inflation. by using a combination of statistical, machine learning and deep learning models. Okay? Here we are saying that how can we predict inflation by using or combining statistical machine learning and deep learning models by applying a performance weighted forecast combination approach. Performance weighted forecast combination, that means we're forecasting, we're using these models, combining these forecasts so that we have a good amount of data and a good accurate data. The objective is to create a methodology for forecasting CPI inflation using a combination of these. And why this matters is because inflation forecasts are very important for monetary policy and for the inflation targeting framework. It is very important. And this approach is going to help RBI in assessing the future price pressures because of this uncertainty and all also. Okay, and therefore no single model. What is this article saying? That no single model is going to capture inflation's complexity, and that is why we need to combine a suite of models. We need to combine these models and then use. Okay, so the approach of combining forecasts of these methods is similar or even better. It provides better accuracy than the standalone models or basically using one model. Okay, and this approach can also generate density forecast for inflation, good forecast, detailed forecast, which is going to measure the uncertainties, the asymmetries also. And this forecast combination, it provides confidence bands, enabling policymakers to assess risks, make more informed decisions, and better policy making. Okay, so we know this that for these models will be used together, statistical machine learning, deep learning models. Fine. And why are we focusing on combining these models? Because there's this forecast combination strategy that we're trying to use, which is going to give us robust, less volatile, and more accurate forecasts. This is going to help us mitigate model specific biases. Biases in the sense that अपनी मर्जी का जो पसंद आ रहा है वो वाला मॉडल यूज कर लिया है ना. Overfitting of model मतलब बहुत ज़्यादा variables ले लिए. All these terms are used in core economics, or you can say econometrics. You don't need to go in this much detail. You need to know proof per se. Misspecification risks हमने specify नहीं किया कुछ ढंग से. And what are the advantages of using the combination of these models? It is going to provide greater forecast accuracy. It is going to provide density forecast with confidence intervals. You don't need to go in detail. Confidence intervals से मतलब हमें पता चलता है कि कितना ज़्यादा accurate है, कितना नहीं है. 95% confidence interval का मतलब है 95% accuracy है. ठीक है. It reduces reliance on only one model, because एक model पे rely करेंगे, it is not going to give you accurate results. It is going to improve risk assessment for monetary policy, and it aligns with this global trend. So there's this global trend that using multiplicity of models or a suite of models or a combination of models. This is a you can say a global trend which we are trying to use over here. ठीक है. And we are going to have best performance by combining these. It is going to give us accurate, adaptable results. Credible communication, communication and credibility is going to be there. It is going to improve CPI inflation forecasts, and it ensures that RBI's monetary policy decisions are more informed, data driven, responsible to evolving inflation trends, basically, in short. Okay? So this was all related to your RBI June bulletin. I hope these things have been clear to you. ठीक है. I know this was a lot in this bulletin. थोड़ा ज़्यादा था इसमें as compared to the other bulletins. Sometimes you get detailed analysis. Sometimes you get a lot of stuff. Sometimes you get very brief stuff. And so you can take a look at this. Initially we started off with a few highlights, key highlights. We talked about the speeches which were given by different members of the board. Then we talked about the 5 chapters in detail. State of the economy. We talked about financial conditions index. We talked about the balance sheet channel of the monetary policy mechanism. We talked about drivers of certificate of deposit issuances. And we talked about CPI inflation and a suite of models. Please read it in detail. If there is anything that you want to ask, you can ask me in the comment section. And if you want to connect with me beyond these sessions, then Mannat Educator is my Telegram handle. You can join this group. Okay? And apart from that, if you want to take up coaching from Oliveboard, then you can take up this RBI Grade B 2025 batch. This is the complete course for phase 1 and phase 2, wherein you're going to get 250 plus ESI and FM classes, 150 plus QRE and GA classes. You're going to get 3 physical books, ESI, Finance and Management, set of 4 downloadable monthly magazines. You're going to get mock tests for both phase 1 and phase 2. So if you want, you can enroll now. So this is your paid batch. If in case you do not want to take up the paid batch, what you can do is you can take this free preparation kit which has been made by Oliveboard for you. This is absolutely free. It includes 10 PDF ebooks. So RBI Grade B 2025 Complete Guide, 100 plus economic and finance terms, RBI Grade B PYQs of the last 5 years will be available, budget highlights, Air 1's notes you will get, 60 plus model ESI and FM descriptive answers you're going to get, quant and reasoning formula book, 20 model essays for RBI Grade B, top 500 general awareness MCQs, 120 plus management MCQs. These are curated by RBI Grade B toppers and experts, so you can avail it absolutely for free. Okay, and the link will be given in the description box. You can access it from there. Okay, so that is all from my side. Thank you so much. If there's any doubt you want to ask me, you can ask me in the comment section. I'll wait for a minute. Okay, for those of you who have not gone through the other bulletins, go through the bulletins of Jan, Feb, March, April, May and June. We have done these bulletins. You will get good amount of data from here. You will get some good statements from here. Okay, Bhakti, you're welcome and have a good night. You're welcome, Atithi. Okay, I'll just wait for a minute if there are any doubts. Manu Gupta, if you are still reading it, you can connect with me on Telegram. I will, give you the number through which you can contact. Anushka, I think I have given your and explained your route as well. Okay. Sure, then that is all from my side. A very good night to all of you. Keep studying. We are going to meet up on Wednesday with the live mint analysis at 8 a.m. And tomorrow I will come up with sessions. You can just check out 7 p.m., 4 p.m. and let's meet it. Let's meet then. Okay. Bye, all of you. Have a good night. See you all in my next one.